Hello friends, I am Narendra Verma once again before you, as I promised you in the previous videos that I am going to attempt a series of numerical problems on the chapter Admission of a New Partner, right? For class 12 CBSE Syllabus in Accountancy. Alright, so today without wasting much time we are going to start the series of numerical questions. Okay, already I have discussed all the theoretical concept. It's time to apply them. Alright, by various varieties of question, you will be experiencing all those concepts. Fine. So, you can see the question on your screen. I have written the question here. Let's read it out. Waqar and Rahman are partners in a firm sharing profits in the ratio of 3:2. Okay, that is their old ratio. Their balance sheet as on 31st March 2020 was as follows. In liability sides, ABC, sundry creditors, provision for bad debts, outstanding salary, general reserve, capitals, Waqar and Rahman. In asset side, if we see cash, debtors, stock, furniture, plant and machinery. Fine. On the above date, Chirag was admitted for 1/6 share in the profits on the following terms. Okay. Chirag will bring rupees 60,000 as his capital. Fine. And 20,000 as his share for goodwill premium, and half of which will be withdrawn by Waqar and Rahman. Right? So this is the case of treatment of goodwill when sacrificing partners withdraw half amount. Okay, debtors rupees 3,000 will be written off as bad debts, and a provision of 5% will be created for bad and doubtful debts. That is something new for you. I will explain. Outstanding salary will be paid off. Stock will be depreciated by 10%. Furniture by rupees 1,000 and plant and machinery by 8%. Fine. Investment rupees 5,000 not mentioned in the balance sheet were to be taken into account. Okay. A creditor of rupees 4,200 not recorded in the books was to be taken into account. Fine. Pass necessary journal entries for above transaction. Prepare revaluation account, partners capital accounts, and balance sheet of the firm on Chirag's admission. Alright. So let's start with journal entries. Okay. Let me tell you one more thing. Whenever you are starting the journal entries, very first do the journal entries related to reserves or profits. Alright. So here only reserve is given, and do check here that any terms and condition related to the reserve is given. I have read all the question, nothing is given. Means in the absence of any information, by default what will you consider? We'll consider that this will be divided between the old partners in their old profit sharing ratio. So the entry will be passed here. On what date the partner is being admitted? On 31st March. Alright. Fine. General reserve account debit 10,000 to Waqar's capital to Rahman's capital 6,000 4,000 in 3:2 ratio. Right. Being general reserve transferred to old partner's capital account. Okay. New partner has got nothing to do with. I have already explained you. Okay. Now let's move on. Okay. Now we are going to read the first term, which is given here. Chirag, new partner, is going to bring capital and amount of goodwill in cash. Okay. So cash account debit to Chirag's capital account to premium for goodwill account. He has brought 60,000 capital and 20,000 as premium for goodwill. In total he has brought 80,000. Alright. Being Chirag brought in capital and share of goodwill in cash. Okay. So this point is done. Now let's talk about this data one. Okay. Let's understand it very carefully. Debtors rupees 3,000 will be written off as bad debts. Okay. So this is one entry. See, now you will have to remember what you learned in your previous standard. Okay, this is a simple entry of bad debts. Okay, whenever bad debt is written off, then it has to be deducted from debtors. Means debtors value is going to fall down. Okay, and bad debt is a loss for us, and any loss or expense is debited. Alright, and whenever the asset decreases, that is credited. So what journal entry we are going to pass here? Have a look. Bad debts account debit, as it is a loss for us. Alright. To debtors account, because it will be deducted from debtors. Means we were to get 36,000 from the debtors, but 3,000 we are not going to get. These have gone bad now. Alright, so it becomes loss and the value of debtors will go down. And the value of debtors will go down, right? So the entry will be bad debts account debit to debtors account being bad debts written off. Alright, now let's move further. See, what the question is saying further, a provision of 5% will be created for bad and doubtful debts. Alright, okay, now we have to create the new provision. So we'll have to remind once again what entries we used to pass for creating the provision. Let me tell you that provision is a kind of liability, okay, and we make provision for future losses. Okay, in future we see that if any debtor is not going to pay us money, who is doubtful, then for the same we just set aside some amount of money from our profit. Okay, so but that is created on debtors, right? Okay, so we need to see, but before that, one more thing I would like to explain you. See, this was also a kind of situation. Means right now we are going to create the provision. Already we must have created the provision. Yes, we have created, it is given here as well. Okay, so this was created for what reason? For this kind of reason. 3,000 we are not going to get, that has been declared, right? So this 3,000 has been proved loss, and for the same we had already made a provision. So now this loss of 3,000 will be adjusted from that provision, and for the same also we need to pass the entry. How? I tell you. Have a look here. Provision for bad debts account debit to bad debts account. See, this bad debts account is a temporary account because for this loss we have already made a provision, and this provision is working there. Okay, like I told you, this provision works as a liability. So liability is credited when it is created, but whenever the liability is finished, then it is debited. Okay, so we are utilizing the liability here, so that is why the liability is being debited. Okay, provision for bad debts is debited by 3,000 because we are using only 3,000. Okay, however we have the fund of 4,000, but we need to use only 3,000. 1,000 will be balance remaining there in that. Okay, for future reference. Understood the point? So this entry is done. Now let's come to this point. This point says that new provision has to be created by 5%. Okay, so now onwards we have to have the provision at the rate of 5%. Okay, so what happens? We have to see here in working notes. Debtors value was 36,000. Okay, out of that 3,000 became bad debt. So now the debtors value is 33,000. Okay, so on this 33,000 we will calculate what? Provision for bad debt at the rate of what percent? 5%. So we will calculate 5% on 33,000. How much it comes out? 1,650. Now this has to be the amount of provision now onwards. Now we see how much amount of provision we already have. 4,000 we had already, 3,000 was utilized here. How much is left? 1,000, right? So 1,000 is available with us. Now how much needs to be created? Only 650. Okay, so in total if we see that our liability increased of rupees 650, and whenever there is a change in liability or assets at the time of admission of a partner, then revaluation account is debited or credited. Alright, so here the amount of liability has increased, right? Means one more liability has been introduced. So what is going to be debited here? Revaluation account. I just passed the entry here, right? So we need to create the required provision. Okay, because 1,000 is already available, we need to have it 1,650. We already have 1,000, so we need to create only 650 amount of provision. So what will be the entry passed here? Revaluation account debit 650 to provision for bad debts account 650. Understood the point? So up to this level we have finished it. Okay, now we'll move further. So I'm going to rub these entries. Alright, you have to keep them in the mind. So let's talk about the treatment of goodwill here. Okay, we have passed one compound entry for bringing the capital as well as the share of goodwill. Okay, but as you know that amount of premium has to be shared by the old partners in their sacrificing ratio. Okay, so what entry will be passed here? So this entry will be passed premium for goodwill account debit to Wakar's capital to Rahman's capital being Chirag's share of goodwill adjusted. Right. Now, what is the amount of premium? That is 20,000. We'll simply keep it here. We'll simply keep it here. Now this amount has to be distributed between them in sacrificing ratio. But here, as only the share of new partner is given and no other specification regarding their ratio to be changed is given. So in that case, what is the old ratio? That is also the sacrificing ratio. They both remain same. Okay, so I am directly calculating here. I am dividing this amount in 3:2 ratio. So we can do that like this. Alright, 12,000 for Wakar and 8,000 for Rahman. Understood the point? Alright, so this entry we are supposed to do because he is bringing amount of goodwill only for the same so that they can be compensated by that. Alright, now the question is specifying here they withdraw half of the amount. So for the same we have to pass the entry. Okay, so this entry will be passed Wakar's capital account debit, Rahman's capital account debit to cash account being half of the amount of premium withdrawn by the sacrificing partners. Alright, so now we'll do the half. So half of 12,000 is 6,000 and half of 8,000 is 4,000 and in total it comes out 10,000. You brought 20,000, so 10,000 they both have withdrawn. Alright, so this was there. Okay, we can keep these two entries near the second entry that I have just done. Okay, otherwise you can do at any time. Okay, but entry has to be done. Now let's move on. Next point says outstanding salary will be paid off. Simple entry, whenever we pay any liability, then that liability is debited. Have a look here. Outstanding salary account debit to cash account 6,000 being outstanding salary paid off. Okay, because 6,000 is the outstanding salary and they're saying that entire amount is paid off. Alright, now let's move further. Stock value depreciated by 10%, furniture value depreciated by 1,000 and plant and machinery by 8%. So these all are being depreciated, so we will pass single entry for this. So this will be the entry revaluation account debit to stock account to furniture account to plant and machinery account. Why? Because the value of all these assets is going down. So whenever any asset is decreasing, we need to pass this entry. Already I have explained. Okay, so now let's calculate the amount. Fine. Let's talk about this stock by 10%. What is the amount of stock? 40,000. And what is the 10% of 40,000? That is 4,000. So I just write it down here, 4,000. And furniture amount is already given here, 1,000. We'll simply keep it here. Okay, now let's talk about plant and machinery by 8%. So we have to calculate 8% of 80,000, right? 6,400. Let's do the total of this. 11,400. Okay, so being assets revalued. Understood the point? Now let's move further. This point is also done. Investment rupees 5,000 not mentioned in the balance sheet were to be taken into account. Now understand this. This investment does not exist in the books, right? But this has to be taken into account means now it has to be created with this value. So we can consider that new asset was created or there is the increase in the value of asset. So the same entry will be passed. Okay, whenever any asset is introduced, then what entry is passed? Whenever any asset is introduced, it is supposed to be debited. This is the treatment of unrecorded asset, right? Now it has been recorded, investment account debit to revaluation account. Understood? Now let's move further. A creditor of rupees 4,200 not recorded in the books was to be taken into account. Same, but it is a liability, so opposite entry will be passed. Alright, have a look. Revaluation account debit 4,200 to creditors account 4,200 being creditors recorded. So this is unrecorded liability, now it has been recorded. Okay. Now let's see any other entry related to revaluation account. No other entry is there, but still be passing one entry, that is the entry related to profit or loss on revaluation account. So one entry is remaining here. Understood? But for passing that entry, we will have to prepare revaluation account. Okay? So let's prepare revaluation account and then we'll pass that entry. I'll leave a space for that. So have a look here. I have prepared the revaluation account. It's very simple to prepare. You just go back to the journal entries. In journal entries, wherever you find revaluation account, just pass that entry here. That has to be posted. Okay, and you already know the rule of posting. In opposite side it goes. If revaluation account is debit, then the entry will come by this: to provision for bad debts, to stock, to furniture, to plant and machinery, to sundry creditors. If revaluation account is credit, it means to revaluation. Then the entry will come here by investment. So only single entry is there. Okay. Now we have to see that which side total is more. Already we see that this side total is more. So let's do the total. Okay. And whenever the debit side total is more than the credit side, it means this is a state of loss. Okay. So partners' capital accounts will be mentioned here. Okay. This side total is 16,250. Okay, we'll deduct 5,000 out of this, then we get 11,250. Now this 11,250 will be divided between these in this 3:2 ratio. Okay, you can do like this. Alright, so Vakar is going to bear 6,750. Okay, and Rahman is going to bear 4,500. Fine, in total they both are bearing 11,250 loss. So this entry will be passed here, the entry I was talking about. Okay, so here what entry will be there? Have a look here. Vakar's capital account debit 6,750, Rahman's capital account debit 4,500, to revaluation account 11,250. Being loss on revaluation transferred to old partner's capital account. So this entry will be done in the journal. Fine, and then we prepare revaluation account. It is already prepared. Now it's time to prepare partners capital account, and thereafter we will prepare the balance sheet. Alright, so this is the format of partners capital account. Without wasting much time, let's prepare it. First of all, by balance BD, we'll keep the balance here. It's given here. Alright, Chirag has brought capital in cash, so by cash account, how much he has brought? 60,000. Okay, and for goodwill, we did the entry that the premium of goodwill is distributed between the old partners in sacrificing ratio. So the entry will be here. You can go back to the journal entries and you can see the amount: 12,000 and 8,000. Okay, now after that, as it is given in the question, we did that treatment as well. Half of the amount, both of them withdrew. Alright, so for withdrawal, the entry will be there. You can go back to the journal entries and see that. Okay, and then general reserve was distributed. Fine. Now, any other entry here? Yes, the loss of revaluation. You can go back to the entry and see that. Okay. Any other thing? I don't think. Alright, so there is nothing left. Now let's make the total of that. So it's very simple for Chirag because no other transaction is there related to Chirag. So his balance will be 60,000. Okay, now let's calculate for Rahman. It's 92,000 total. Out of this 92,000, we have to deduct 8,500. That is 83,500. Okay, now let's talk about Vakar. What is the total here? 1,38,000. And out of this 1,38,000, out of this 1,38,000, we need to deduct 12,750. That is 1,25,250. That is to balance sheet. It has to be for what equity? Balance sheet. Alright. 1,25,250, 83,500 and 60,000. Okay. Now it's time to prepare the balance sheet. So this is the format of balance sheet as at the 1st April 2020, liability side and asset side. So let's put the value here. Okay, sundry creditors. We have to take care that the values which have been changed. So we have to record the change value here. Alright. So earlier the creditors were 40,000 and unrecorded creditors were also recorded 4,200. So the total becomes, I just mentioned here, 40,000 plus 4,200, 44,200, right? Provision for bad debts, we'll do the treatment later on. Outstanding salary has been paid off, so it does not exist anymore. This general reserve has been distributed exist anymore? Yes, capitals. We have to pick the values from the partner's capital account. Okay, so what were the values? You can go back to the video. In the journal entries you can see. You can go back to the video and see the partner's capital account. The same balance you find. And the total is, alright. Now, let's see the asset side. Cash. We'll talk about cash later on. Very first, let's do the treatment of debtors. See, debtors were there of 36,000, fine, but 3,000 debtors were written off as bad debt. So 3,000 will be deducted from here. Then how much will be left? 33,000. Okay, now we have two options. Either we can mention this provision for bad debts here, or we can deduct this provision for bad debts from this, and this is appropriate. Alright, so now how much amount is to be deducted? See, we created provision by 650 rupees, and already we had the provision of 1000 left. So at present in total we have the provision of 1650. You can go back to the journal entries and have a look there. How much it comes out? Alright, so if you want to mention this provision, then instead of deducting it from here, we will directly write down this 33,000 here and this 1650 here. Okay, so in that case also the total will match. However, the difference will be there in the total, but it will be matched. Understood? So this is the appropriate way. Now move further. Stock. See, stock was there of 40,000 and 10% stock was reduced. It means by 4,000 it will be deducted. It will come out 36,000. Now let's talk about furniture. Furniture value was 80,000 and the depreciation was there of only 1,000. So it will be mentioned here by 79,000. Now let's talk about plant and machinery. Plant and machinery stood at 80,000. And how much deduction was there? 8% be 6,400. Now let's see how much it comes out. Now, student will commit mistake here. Investment has been introduced as creditors have been recorded. Similarly, investment have been recorded. So as investment have been recorded, these will be shown here as asset 5,000. Alright, no other treatment is left. Fine. Now let's talk about cash. Why I left cash for last? Because something you need to understand here. Okay, in cash, how much was the initial balance? That was 24,000. Alright, and how much new partner brought? He brought 60,000 as capital. He brought 20,000 as his share of goodwill. Understood? Okay, and how much it comes out? 1,04,000. Now, out of this 1,04,000, few payments have been done. The partners have withdrawn half of this amount, right? So we need to deduct 10,000 out of this. Then what we get? 94,000. Now, out of this 94,000, also one more payment was done. What payment? This outstanding salary was paid, and it stands for 6,000. It was paid in cash. You can go back to the video and you can see all the entries related to the cash. Then you can adjust it here. So it comes out 88,000. So that will be mentioned here. Okay, you can mention here, there is no problem. 24,000 plus 60,000 plus 20,000 minus 10,000 and minus 6. Okay, now let's do the total. This side total is 3,12,950. Alright, now let's see the total of this side. Alright, so total is 3,12,950. Okay, so here both side total matches. So in that way we can attempt the question. In this question we did journal entries, okay, and we prepared revaluation account, we prepared partners capital account, we prepared balance sheet. Fine, that all I did just to make you understand. In your examination, such a long question is not going to come. Okay, only few things you need to make. If journal entries are there, then only revaluation account will be asked. Okay, if journal entries are not there, then you need to prepare revaluation, partners capital and balance sheet, and that entire question will be there for 8 marks. Understood? If the question is coming for 6 marks, then you need to prepare only 2 things. Okay, They may ask you to prepare revaluation account as well as the balance sheet. Okay, and partners capital account you can prepare in working mode. Okay, so such kind of things can be there. Okay, so this was all about this question, but as I told you, we are going to attempt a series of numerical questions. So now we are going to attempt the another numerical question. Fine.